Nunca vi uma pele tão bem cuidada. Novo Power Serum Anti-Idade 2 em 1 de Nivea Man. Reduz as manchas escuras e as rugas em apenas...
guys, how are you doing? Nice to make you louder.
What's up, guys? Can you hear me? Hello, hello. Yeah. Okay.
Good, buddy.
Feel free to talk, guys. I'm not gonna. I'm just gonna chill for a bit and try to plan out tomorrow.
Have you had a good day?
Yeah. Just, you know, I'm kind of tired of editing photos. But,
Yeah.
you know, nothing bad happened. Just too much of the same.
Yeah, it's, mine's been very similar.
Just boring. That's okay.
Yeah,
It's better to have a boring day than a bad day.
yeah.
Did you get any trades today?
I shorted a little bit early and ended up going to the shop and getting liquidated when I come back. I was high leverage.
Oof.
And
Where
shorted
did
being-
you enter?
37.6, I think it was.
36. That wasn't terrible. That was not bad.
Yeah, well, it liquidated me anyway. I was 150x or something.
Damn.
It liquidated
that
me.
one was was for the P&L shot.
I can't help myself. I try to be on my good behaviour. I'm on my good behaviour all day, and I'm getting little wins. And then when it comes to night time, I just lump on, and I go all in.
Man.
It's not good.
When you started saying good behavior, I started thinking about being a good boy.
Yeah, if I do small position sizes, I
Yeah.
do really well. If I bought large position sizes, I get smoked.
You know, that's probably a psychological issue. Like the pressure of being in a higher position stresses you out, probably.
Well, that's why I went to shop, Andre. I just put my phone down and went to shop, and when I come back, I've been liquidated. But that's what I'm normally watching it too intensely. I get a little bit twitchy, and I take my profits too early, or I add on at the wrong time. So I just put my phone down, went to the shop, and yeah. But I got in at BNB rate at top.
Man.
I'm still in the short on BNB, but I ain't checked it for the last 10 minutes, so I don't know where that is.
I'm gonna give you a very strong advice. Never install Bookmap. Because if you're a guy that stresses out when opening positions, Bookmap will make you indecisive as fuck. I can't imagine. Trust me, don't do it.
I do see it every so often, and yeah, the spoof orders are quite a lot, and that'd, like you said, that'd do a lot of damage.
Yeah, I sent. Let me see if I can show you. I sent today 2 screenshots. For someone from here, from Geo's Discord, and I was talking about. Yeah, okay, it was this. Tell me if you can see it on my screen.
Yeah.
When we were at 37,350, we got a bunch of orders just supposedly creating a sell wall, right? So in theory, price would have a lot of trouble getting above that. And I sent him that, and I told him, you see those last green bubbles right there? That usually means absorption, and it's a spoof order. Price will probably go up again. And like not even 5 minutes or 2 minutes, less than 5 minutes after that, after I sent him that, this happened. So
Wow.
can you see my mouse cursor?
Yeah.
Okay. Those 2 bubbles that I was talking about are these 2 ones here. Price just like fucked it up. Just continued pumping, and then you got a real support here at 37,300. That was real, but this one, yeah, I see that a lot, and people that are you know less experienced about it. They will just see that and think it's a sell wall, so it should hold, you know. But that's
Yeah,
kind of a
sometimes
trick.
I do it. Sometimes I do it, Andre, with swing failure patterns. Do you know, I'll see failure, and I just jump in rather than waiting for confirmation or for it to break market structure.
I think probably the best way to do that with Bookmap is just to wait for price to get a really nice reaction, and seeing the lack of sell orders ready to sell. Because if there aren't any sell orders at an SFP level, buyers will just have no one to sell it to, or to buy it from, actually.
Yeah.
So the buying power will just decrease. But it's kind of hard to predict that with Bookmap. Probably just going into a very low time frame and looking for a cipher B divergence or something like that is even safer.
Yeah.
You're so quiet, guys. Far too quiet.
You okay, buddy?
I'm just
But I have the
trying
same.
to see.
I have this
Yeah,
same problem
sure,
like
go.
him. You know, like it happens. You know, like the whole day you are very disciplined, and then in the evening when you're like getting like staring the whole day at that thing, it starts like getting so. I don't know. You just do dumb things all of a sudden. It's like really hard. I was just talking to my wife before that too. I said like, hey, this discipline part is just like, man.
Yeah,
Yeah.
discipline is probably the probably the hardest thing to learn, and it's probably the one that takes the longest to master. This is almost starting to look like a Wyckoff model.
Yeah.
What is a whack-off model?
Let me give you an example. If I can find it. I have two folders for my own stuff, and I mix them up all the time. So these are the Wyckoff schematics that I gathered from several places. I had to redo some of them, and
Are these like special structures, like which when they come or when they're similar, that you know what kind of direction they go, or
yeah, you
what
can.
kind of?
So the Wyckoff main, the main concept of Wyckoff is based on imagine like a sine wave, where you start on one end, you go either lower or higher to a place where some kind of exhaustion will happen, and the opposite happens, and the cycle repeats. It's called the power of three, and generally it's accumulation, some kind of a manipulation, and then an expansion. And the expansion can be a distribution to the downside or a reaccumulation to the upside, for example. But it's generally when after you get like a big move, like the one that we did reaching 38k, you get into some kind of a range, and during that range some kind of exhaustion happens. So for example, in theory, and this is what, for example, me and Gio have been talking forever, in theory all of this, and you can see it in volume in several other indicators. For example, you can see that volume has been decreasing overall, even though we are going higher, and you can see this on higher time frames for CVD as well. Let me just change to the 4-hour. For example, CVD has been going lower and lower, and we're going higher and higher, right? So in theory this means general exhaustion, but we're still bullish. I mean, we didn't take out this low, for example. And this low over here was a very healthy low, because it was an SFP of this liquidity. It seems bearish, but it really isn't. I would actually be more confident today for more upside if we took out this low, but we didn't, because that would mean grabbing liquidity and maybe getting more fuel to the fire, right? So I saw someone talk about the idea of being super close to the high and not take it. This is a very common situation to happen, where now maybe we will get some kind of, where's the rectangle? Maybe we'll get some kind of structure in this zone, to where we can short from to take out not this low, but this one probably. Also, there's a concept about the idea of trapping traders on vector candles. And for example, let me show you an example of what I mean. Yeah, I think maybe this one is the better example. The idea
Yeah.
of you having this whole vector not being recovered and then taking it out. This means basically releasing traders that were trapped there, and this generally happens every single time when you have like a big wick. At least part of it will be recovered. For example, you had this one super big. If you notice, so this is the middle line, right? And initially we didn't tap into it, so in theory we would need to at least tap 50% of it, so we did here. And the idea of us not taking out this high gives me the idea of creating some kind of structure here from where we can possibly take a safe short. Maybe we can even create that during Asia session, and going somewhere into here, recover at least a little bit of the vector. Let me see if we have some kind of structure there. This is lower. 35,232.1, 230. Okay, so for example, these lows that you see here, this second low did not go lower than this first low. So these are liquidity, they're a target. Let's see if we have a liquidation level there. So that is around 35 something. You know, high block is really powerful, but the website is so fucking slow, man. Takes so long to load, and when it does, it's really like Jesus.
Yeah.
Okay. 36,279 and 35,538, and this one is 35,5. Wait. 35,997. 35,188. 35,188. Yeah, that seems about right. So SFP this, create some kind of structure, and long after taking it. That's an idea. I like that one. The sounds.
That's like in the soccer stadium, you know, like now we need the La Walla wave, you know, to go through the stadium.
Okay, that order block seems about right. For the time being, we are creating support because of this guy. because its liquidity got taken before going up. So this general area should provide some support. I don't think it's gonna hold, but it should. I was during the afternoon. I did. Actually, I want to show you guys something. Where should I start from? Maybe start from here. So check this out. Simple strategy. We create that low, right? Just follow order blocks and imbalances after that. So, one imbalance. Well, this is kind of a spoiler. Wait. Let me delete that. But you have this imbalance here. Price goes straight above it. And now you have a BBR, okay? If you consider the first one as well, you can see it like this. So this is your BBR. But after that, jeez, this zoom is fucking me up. Okay. So this is your first reaction, indicating a possible move up. So after this, you get this guy. So don't forget about it, okay? This is for later. We do tap it, but we leave this blue vector. Then, just as price goes up, notice that we create a block, go above it, go back into it, continue. Another block, go above it, continue. Another block. Another one. Another one. Another one. Each one of these can be trades, right? So you get a reaction from there. Okay. Then you react to that guy.
Yeah.
So you would actually I didn't even know what to say. So much information, holy macro. This would be if you go on smaller time frame and you would like to scalp. Am I correct?
Yeah, sure. But it's more in terms of understanding if price is actually getting some kind of support. You know what I mean?
Mm-hmm.
So when you see, for example, I think the strongest blocks for me have to do the following. Let me go to a blank space. They have to like, you get a candle. Imagine that you are, where's the brush?
by the rectangle.
You know, I use TradingView so much, and I for constantly forget where things are. So imagine that you get a candle like that, and you can then you consolidate. Like, you get a candle like this. You consolidate some a little bit more. Sometimes it can even just be one candle. But then you go lower than it, and you take out its liquidity. After taking out the liquidity, you get a strong move up. Or you even just close a candle above that high. If you then go into it again and continue, that's support. That's basically a sustainable move. So when that happens, and for example, imagine that this happens to all of us, right? You get into you get to a certain point, a certain level. Let's just say for this example's sake that this was a liquidation level, for example, and price reacted, but you're thinking like, I don't have an entry. Like, where should I enter, right? After you start seeing price reacting to imbalances like this, and then just like creating a block, reacting, continuing up, creating a block, reacting, continuing up, block. Okay, this one took out its liquidity. Oh, this is actually interesting. Take a look at this. So these two guys, notice that if you look up here, you will see the low and the high values, right? So on this candle, you'll see that it's 342.6. The previous one is 342.5. So this bearish candle is lower than the next. If and this is just what typically happens. If this candle, the one that got out of this mini range, if this candle took out the liquidity of these guys, price would probably not go below it. Just like, for example, it happened here on this white candle here. This is just like your typical situation where you get a liquidity serving as fuel for a bigger move. So for example, this is another very good example. You get, this is basically the REMC concept. This is the range. This candle sweeps the liquidity of the range because it goes lower than it. Okay. After that, it's the initiation part where price just moves out of the range and going back into it. So going back into this range
would be support then.
This is the mitigation. It's the M part, and basically the reaction of it. The reaction of it is the continuation. So in forex especially, actually this is a very good confluence because these are stacked highs, almost equal highs. So this would be your first TP1, especially trading in forex, because REMC is a concept originally used for forex.
So is this a kind of market structure? What you are doing?
Yeah, it is. For example, so you wouldn't exactly wait for a change of character in any of these because this is basically just a liquidity curve. But yeah, basically, oh, sorry, I'm not using the path. So basically you did this, that. For example, here you would go into that high because this is just internal. So that high, continuation. You have several blocks, so you can say that this is the structure, something like this, just because of the blocks, but this point this is getting too micro, you know. But you can see it like that anyway. But yeah, basically this is market structure, but very low time frame. But it is a way of checking if a structure or a move is being sustained or not. When you see blocks after blocks being sustaining price, yeah, that's a good indication that price will not stop right now.
It's really helpful, that, Andre.
Shit, thanks.
Absolutely, holy macro.
Yeah, really helpful.
I'm not even sure if, for example, this example creates that, but let's see. So
Well, all today I've been looking at that IMC. I've been looking at the continuation patterns and stuff.
this example is kind of fucked up in the sense that so let's look at it like this. Oh, actually it's not that fucked up, but it's harder in the sense of stop losses. I'll explain why. So you are in a downtrend, right, from here to here. So in the downtrend, you have like this very micro structure, which at this point, if you notice, from this high is where things get interesting. Why? Because you have this high and this low here that gets taken out here. This red low gets taken out by this candle, very slightly. After that, you get this high taken out by this high. But then you start creating a downward structure. So you leave out these highs that are basically equal inside of this very small range. Okay, this was a very small range where liquidity got taken up and down.
Yeah.
After that, you get this big move. So notice this. This is basically a range which at this point did not get its liquidity taken. So in essence, you get this liquidity, this move here, which does take out the liquidity of the range. Okay. And after that, you have this one imbalance. I'm gonna say maybe two. I'm saying maybe because this candle doesn't have a wick. And another maybe here. The problem about entering in any of these places is that the stop loss has to be up there, so it sucks. However, it gets interesting in this sense. So you confirm that you get a reaction from one of those, and then you create a structure downwards, right? So this is your change of character. This as well. So after this, you start looking for structure to the downside. So you get one order block here. You can also consider that one there. I like order blocks that have FVGs below it. So this is a very small one, but it is there. If I can drag it, I can't. Too small. Okay, but this is an imbalance, and then you have another one over there. So the three main things for me to consider an order block valid is that it has to take out some liquidity before going for the opposite direction. So for example, this guy took out this high, and this guy took out the previous candle's high. And in theory this would also be valid, but doesn't have an imbalance after it. So any of these two places are possible shorts. Let's see where it reacts, or if it reacts. And oh yeah, I forgot that I should consider that guy, right? Sorry, I didn't see that mini wick. Kinda stupid, I know, but it is an imbalance.
Yeah.
So now the problem is that in this situation you don't have any order blocks to open orders from. For example, YouTube teaches you that you should look for contrarian candles. So if you're going down, let me hide the vectors. If you're going down, this upwards candle, this is a block. So the moment it forms, in theory, you want to open an order from it. This in theory is also a block, and this in theory is also a block. And for example, this would actually be a valid entry in the sense that price actually went down here and then came up and continued. But you know, these are just a lot riskier. Why? Because as price is doing this, all of these highs are lower than the others, except this guy. Only this guy took out the high of the previous candle. None other candle actually did that. And another thing, guys, when you see a curve like this, do not ever take any kind of trades in between this, because none of these highs took out the liquidity of the previous candles. They are all targets. None of them are places where price might resist or have a reaction. So following that logic as well, your very minimal target would be either the imbalance, not this one because it was used. So after an imbalance is mitigated, it's useless. It's a target only. So your minimum target would either be this imbalance or this high. Minimum. Just because all of that was just liquidity, right? And after you get this reaction from this PPR with success, just look for an order block, which in this case was this guy. For example, a valid long. Let me delete this guy and do this part again. You see that imbalance? Price reacts, and after reacting, if it goes either up above that, or if it goes above this block here, you just find a block, which in this case a conservative entry would be this, like along from like here.
Yeah.
Because that's a block. And your stop loss can be that low. Why? Because it was a reaction. If price uses an imbalance, which a BPR is, if price uses an imbalance, if it is to go back there, it will be to continue lower, or to just continue in case it's a high. So it has no business going below that. If it is to go below that, it means that taking out this high was just another liquidity grab, and that eventually it will continue going lower. So you got your entry right there. Very perfect tap. And then the moment that you see, for example, a reaction from here, I don't know if we got that. Okay. Oh yeah. I forgot. We got a reaction from this guy. So the moment you got a reaction from a block and that price continued, you can just move your stop there and ignore this. Because again, if price is to have a sustainable move, it has no business going back there.
Yeah, well, that's what I thought I'd done this morning, because I booked my trades on at it was about 3 o'clock, and I put 3 on, and then this morning I changed my stop loss, and I've miscalculated it.
What do you mean by miscalculated it?
I must have put it too high, and it's been hit when it's come back down to that order block.
Man, that
Just
sucks.
that bit what you're showing then, that's when it was. It was about 150% in green, and it's about that point where you were doing that order block. It must have been.
Man, that sucks, man.
I do it regular, Andre. It's frustrating because that'd offset a lot of my losses if I would just gain that part right.
Yeah. I think that, again, bro, I think that's just psychology. Just work on that. Because, but 2 things. Don't leave money on the table. Always take TP1 somewhere. Wherever you find. I had a guy that just, for example, if price just moved enough for him to make 1% of the trade, he would just take it and leave the rest going. So imagine that you have, let's say that you have a 5R trade. The moment that it got to 2R, he would take 50% of the trade and just let it ride. I mean, let it ride to reasonable targets, right? But his main idea, and I kind of like that idea in terms of psychology. His main idea was that most of the times he would just do that for the first trade of the day, with the idea of, like, if you get that first trade of the day as a win, whatever you do for the rest of the day is playing with house money, you know?
Yeah.
So that kind of...
It's a momentum thing.
Yeah, that kind of eases your mind a bit. It's maybe easier next time if you enter a trade if you're not 100% sure about it, but still you have enough reasons to enter, you know. It's a bit less stressful if you can already get a win before taking it, because you'll probably have more confidence with it.
Yeah, it's not a bad suggestion.
We only made divs with the view up and the anchor waves. Money flow was thick and up there.
It makes sense for us to go 39k, I think. Just smash through and then pull back.
The idea that I was telling you about, when an imbalance is tapped, if price goes there again, it will simply just fill the rest of the imbalance. That is the same thing for single prints. And for example, let me show you something. Oh, I don't know if I will be able to open this, but yeah, well, fuck it, let's try. It's okay. That was fast. Or is it still thinking? Oh Jesus, that's not fast at all. Man, come on, you can do it. Oh, but it didn't load. I asked for 7. Okay. 650. Now it's gonna get hard. It's downloading the days. I basically just asked him for 650 days. It's to show you the single prints.
Yeah.
It reacted to one. It's not gonna be able to. Oh fuck it! I chose the M5 chart. It has to be at least 1 hour, or it will crash. It's not even fucking loading anything. Let me restart it. Man, I fucking hate YouTube ads.
Well, there's an eclipse in a few days, and normally there's some kind of reversal around eclipses. So I'm thinking it's playing now that it's gonna shoot up. It targets people maybe not expecting, but get people's limit orders to set off, and then reverses down on eclipse.
Maybe. Oh fuck! I think I. God damn it! I deleted it. Wait. So now I'm gonna choose 650, and it should load. But while that loads, if it loads, whatever. While that tries to load, basically when we got, do I still have it here? I don't know. Yeah, I deleted it. I generally just like to keep the single prints that are still relevant, and then I delete the rest. But we had a single print here, if I'm not mistaken, it was at 3804, I think.
Right.
So reacted to it. Very nice reaction, obviously. So now if we do go back above this high, I don't think that we're just gonna have like an SFP. I think we're going to 38,904 at least, because that is the single print itself. And for example, if I show you the 4 hour, the single print is basically come on, was basically this area here. And it's extremely interesting that we have this on the 4 hour. This was a VPR. We basically just went above that just a touch and dropped heavily. So now if we go back, there's two things. First, the single print filling is the minimum target, okay? Second, the only resistance in terms of profile that we have is this TPO POC. But the problem about this TPO POC is that it's on a curve, a liquidity curve, and I'm really not sure that this little guy can hold price. I'm really not sure. Maybe if after this guy happened you did not get a retest of it, was like straight in balance from that block, maybe it would be able to hold. But I also have the idea that after a block is tested, it's useless. So this was retested just before going down. So I think that if we go again to this area, this guy should get taken, and that's 40k. I think only time will tell us if this is true or not. But I was saying that this is starting to look like a Wyckoff model, but maybe only on BTCUSDT. Let's see. No, not even there. If this high was lower than this one, it would look like a distribution model. But this high is higher than all of the rest. So I don't like it. I think it's just a target. And we are basically creating a very common pattern in BTC, which is stacking highs. We do this a lot in BTC. We did it, for example, on this range here.
Yeah.
This was in July. And the thing that I was talking to you about, leaving a high untouched, this is an example. Like, you have this high, and when you SFP this one, you almost tap into that guy, but you don't. And for example, in comparison to what we have here, I'm gonna guess that's a vector, exactly. In comparison to what we have currently, you have this vector, this whole area isn't touched, and notice this. See that candle right there? It only needed to get to the 50 line, and then it went up. And this was actually a perfect Wyckoff model. I can show you an example. If I think that's a distribution model 1. Exactly. If I put this here, notice this. So this high here is your BC, it's this guy, and then you have the AR, which is either this one or this one, and this is your SOW. SOW stands for sign of weakness. So the moment you take this guy and also take that guy, this gives you a hint, a possible hint, that maybe you're going to create a range here, which will basically be SFP after SFP to a downwards movement. So then, after that sign of weakness, this is your UT. This guy here. And after that, this area here, this one here, this is your UTAD. UTAD is up thrust after distribution. So this is the distribution, up thrust, and after that we enter into phase D. And for phase D, all you need is something like this. You don't really need to come back here at all. So this is your first LPSI. I don't remember what LPSI means. This is your first, this is your second, and this is your final sign of weakness, the last one. And here, now this has to be tested, this range. Something here has to be tested in order for the distribution to actually really confirm. And it, well, it fucking did, right? But in this case, right now, all we do have as a similarity all that we do have is, oh right, I'm on Coinbase, forgot that. Actually, this was a lot cleaner in Coinbase. What a beautiful thing. So you have this block here, amazing entry, and you get an SFP of this guy, which is just the one before the vector. That's really clean price action. I'm surprised. Imagine this trade. Jesus fuck. Let's just simulate it. So I would target the vector at least to recover that. That's a 14R. And actually that was a lot of days. 3 days, 4 days. But well, still amazing trade. Actually, it's really interesting then that this is not a vector. So theoretically, this guy is strong in theory. This is 37,180. Let's see where that stands in our MXC. Oh, it's where the single print is. Okay. I like that. So very possibly this is kind of a degen trade. Don't limit in. But to take out that guy. 11R. But let's not forget about this. So that's your middle line. I like to use the 4-hour for the vector recoveries, by the way. It's just a matter of experience. I think they have been more reliable. The middle line of the 4-hour recovery. I'm talking about wicks only, when you have wicks like this.
Right.
So that middle line is interesting, not forget about that one. So this is a very stupid trade to limit in, but it's a possible one. And this one I would just target that, but for this one I would target the 38. This is such a stupid stop loss, it's just 5R to get up that high, but whatever. It will serve as a zone to look out for. So this is a 1-hour block, right? Yeah, okay. So I don't like these guys because they create a curve, you see? And I don't trust these kind of curves. Just like I don't trust these ones, for example. And look at what happened.
Right. Yeah.
So yeah. Okay, one interesting thing that I saw earlier, and we were talking so I didn't discuss it, is this. If you notice closely, this block was front run. So oh, actually I forgot to do one thing. Yeah, that sounds about right. Let's see what we have. Oh, that's nice. It's a 10. Let's see the 5. Yeah, that's probably the best. So, why is that a good one? Because you have an imbalance to fill. imbalance to fill, but keep in mind that these are highs that can be taken because they create a curve. Now that's cool as well, that little guy there. Oh, this is interesting, but it's probably not gonna work. It's just a rare occasion. Oh, it was tapped. Never mind. I was gonna say that this guy is a breaker block, but it was tapped. Never mind. Yeah. Okay, this is the last guy. Last survivor. Oh, well. Okay. So basically, this would be the very conservative entry. Something like this. Possibly. This is nice because we are this high was created during Asia session, so it's a target. And if we just SFP that, let me put an alert on that. If we just take out the high of the Asia session, that's good confluence in terms of if it's an SFP, we are to target lower. And it's super cool that the 1.272 is right perfectly on to the dollar, to the cent actually, on one of the single prints, which is a target.
What price is that, Andre?
The single print?
Yeah.
37,170.
Cheers, buddy. I think I've already got an order on for that. Told me that before.
I actually like this guy, the 3.1618 deviation, because it's the end of the vector, I think. Let me see. By the way, I really trust vectors on the 15 minute. I don't know why. They generally provide good targets. Yeah, this is a good confluence. So this would be the conservative entry, targeting at least this, and the degen entry would be to enter on the 1 minute block with a stupid tight stop loss. And this would be an insane risk to reward. Yeah, just 11. Nothing much.
Yeah.
But
That's,
this has a very high potential. Any of these two trades have a very high potential because two things. If this guy fails, actually this target is kind of stupid because I think we are at least targeting this curve, these continuing lows. None of these lows took the previous low, so something like this. And if this guy eventually fails, if that other block fails, we should at least get to that liquidation level, and then the trade turns into a 25R, and even the conservative entry turns into a 9R. So that's a lot more interesting, but Jesus, this looks messy now. Yeah, I'm gonna post this. I just don't like these trades because of one thing. Do you guys maybe remember why? Something that I said today. It's cheating if you go back to the channel to check.
No, I can't recall.
It's just because of this CVD. When we came up here, let me go to the 5 minutes. When we came up to that high, there was no sign of exhaustion. So if you connect these highs, everything is a setup.
Yeah, no divergence.
No divergence at all. So, you know, taking the high is very probable. But you guys can do something like what I showed you today. Like, imagine that you get a reaction from one of these levels, and then you start seeing price react like block after block after block.
Yeah, follow it down.
Yeah, follow it down. And the moment that you see a change of character, consider TP1. If it happens. Because it might just not even happen that way. Also, of course, that it is obviously better if after reacting to one of these guys you get a vector right on the last candle, because that just means that price is probable to go back down.
Can you show
Where is
one more
this
time
big
how
one?
you're doing?
Let me just take note of this, bro. 1 second. 38215. $38,215. Yeah, that would just simply be an SFP. That's almost the same as the high on MXC. Just by a smidge. What were you asking?
No, I just wanted to ask you. I have never seen this. How you did that with the blocks? You know, like that was so fast. Can you just one time, because it's not very clear for me. You know, like what you did. You know, like you say like it's a zone, and then
The wicks aren't touching, so it's like leaving the gap.
Let me
Like a
do
fair
an
value
example
gap.
here. You see this area right here? Let's go here and I'll explain the thought process. So, first let's look into a time frame like 15 minutes at least. Okay. So you are up until this moment. Let me make this thick. up until this moment, you were in a downtrend, a very clear downtrend. Something like this. I'm not even gonna bother too much about marking them right. And for example, this was a very impulsive move. This is a much slower and smaller move, so this is a retracement, and this was not as impulsive as the biggest one, right? And after that you get a change of character type 2. I'll explain that in a sec. But it's basically just the difference between being a candle close and a wick. So you get this high's liquidity taken by this guy. This is your first sign that maybe the downtrend is slowing down. Not eventually ending, but slowing down. So there are two types of change of characters, or two types of BOSs, break of structure. Type 1 is when you close a candle below or above a level. Type 2 is when you just SFP. The type 2s are good just as a maybe sign, a potential sign, that whatever is happening is maybe slowing down. So this is your first sign that you're maybe going to create a range. And for example, the fact that you take out this high and don't create a new breakup structure, this actually confirms that, yeah, probably we are creating a range. So you go again, you don't take out this high, so this low is now weak. You take it out, but you don't take out this guy. And again, this in theory, or this guy in theory, is strong, but you don't take out this high. So in essence, from this moment you are in a range, and you should be expecting one of these guys to be taken, either this one or that one. After one of these get taken, you forget whatever structure happened before, and you think the following, like, if you get an SFP of this guy, an uptrend should happen, even if it's a small one. If you get the liquidity of this guy, a downtrend should happen, even if it's a small one. So we create a little bit more of a range, a little bit more, and now we take out that liquidity. Okay, and notice that now we did not go further. So after this moment, there's only one guy that got a reaction, this guy. And let me go back a bit. So you have this candle, price goes above that candle, and at this moment you should mark it out, just not to do anything, just to see what happens. Price continues above, closes below this guy. If you get a reaction now into it again, and price continues up, which it did, now you start looking for blocks. And for example, you have this guy, which is actually good because it's lower than the previous candle. If price closes above it, okay, we have a close now. If price closes above that, this is a possible entry. Let's see if it happens. Okay, we didn't get it. Now you have this guy, and I won't consider these guys because they are ascending. This candle did not take out this candle's low, and this candle here did not take out this candle's low, and this vector here did not take any of these candles lows. So these lows are probably not a good entry. However, because this range is from here to here, if you draw a fixed range volume profile, okay, the interest area starts at this blue line. So we'll just leave it at that. This is another possible entry. Something like this. Let's see if it goes back.
But you wanted to touch it one more time to retrace it to then have your entry, huh?
It didn't price after breaking out of this range. It didn't tap it yet.
Okay.
The same way that price after being in this range here, nothing tapped it. Okay.
But you didn't started your trade. You
No.
didn't go in.
No,
Okay.
no, no. I would just wait, because why would I just wait instead of, for example, longing this breakout? For example, a lot of people do this. You have this range. For example, like this. You have this range. A lot of people would just place a long trigger order, like so. And the moment that it got out of that range, they would just enter. The problem about this is that not only your risk to reward suffers with that, but it's also the reason why you get retests. For price to actually have a sustained move, it needs to retest something. So, you know, there's always a high risk of it coming back to here. This, for example, this block here is just a confirmation of a possible sustained move, and all these guys are possible retest areas. And sometimes, and this happens very frequently, price will shoot up a lot and induce people into buying, you know, just to then go back to it. It happens a lot, really. So here's another range. For example, the further, the more it goes up, it gets even more and more dangerous. First, several factors. First, this vector
Has to be still recovered.
it's yet to be recovered. If you use the body of the candle, you'll notice that the 50% line didn't even get touched. It was front ran. So it gets kind of dangerous the more and more further away you open trades, you know. And for example, you can argue that this block here, and you can also argue that this block here, there were also possible entries. Of course, that your stop would have to be here, okay? But they were possible entries, like something like this. Like this. But the problem is that you can only target that guy. You don't know what else is going to happen. It's still a 2.48 RR trade, so, you know, not terrible, but you cannot target higher than that because there's a possibility of it retracing.
And if we would have retested and would have gone up there, you would have been a little bit more secure with the stop loss, like that it's coming down again, huh?
Exactly. The theory of blocks and the theory of the REMC concept is that if you create a range, price mitigates it and continues. Price has no business going back there. If it goes, that's a bad sign.
Okay.
And And something happened here while we were talking. I don't know if it's actually triggered. Let me see. But I remember that I showed you that block. I don't know if it's... Oof. Close, but it didn't. Okay, got now. Okay. Oh wait, is this equals? Oh, okay, sorry. My bad. These are equals. If you see on the top screen, you have the low and high and open and close values. The low are equal, so this liquidity did not get taken, so this is not valid, I'm sorry. But these guys are.
So,
So for
the
example,
bottom
this
ones
trade
are
I think
already
it got
touched.
open. Yeah. So
Yeah.
this would be your target. Let's see if it works. Maybe not. Oh, it did. Fucking perfect timing.
Smashed it.
Yeah.
But you see, this is basically, this is my strategy. Basically, this is what I do most of the times. You find a range. For example, if I go to a bigger time frame, that's probably just one or two candles. You see. And when people see some of my entries like I'm a fucking genius, it's not exactly being a genius, it's just seeing blocks that got the liquidity taken. And it doesn't work every time, but when it does give very nice entries and also very nice risk rewards. So this would be an almost 9R. That would mean that I would have to lose 9 trades in a row to be where I started. I didn't mark it out, but this is also a possible one. Here's a good example of what I don't use. This is not valid for me, because even though it created an imbalance, like so,
Yeah.
even though it created the imbalance, before doing the imbalance, it did not take out this low. And because it did not take out this low, if you notice, these are descending lows. It's a ramp, it's a curve, it's a diagonal, whatever you want to call it. Me and Gio, we usually call it a liquidity curve. Something like so. Something like this. When you have curves like this, they are targets. But if you notice, where does that end? It ends here, right? This low took out 1, 2, 3, 4, 5, 6 30-minute candles lows. So in theory, this is a strong low. This guy. I don't know if price ever reaches back into this. I would like it to come back just to see if this theory is right. But it generally is. Almost. Yeah, okay. It got taken out, you see. Let's see if that block holds. Oh, by the way, where did it hold? It held on to this guy. Here we can also talk about the theory of just recovering the last vector, which is something very common. And actually, let me see where does that relate to fibs. Did it? Yes, it did. 786. But I would have to put my stop loss there.
So what would your other confluences be to get into that trade? Would you just go off them order block on trade?
My confluences would be the following. First, take out this whole liquidity, this range's liquidity, and create a new movement. See on the lower time frame, such as we saw here. My music stopped. Bitch. Such as we saw here, this block getting tapped and price continuing.
Yeah.
So now you start looking for ranges. Very reliable ranges generally are the 15-minute ones. And I'm talking about small ranges like this. It doesn't have to be a super, like, 1 hour range, you know? So
Well, I generally use 1 minute and 5 minute.
that's too low for me.
Yeah,
And
it's for me as well, I think.
the main reason why I think it's too low, it's that talking about market makers, for example, it's very easy for a small, quote-unquote, small trader to force price to change on the 1 minute time frame. Whatever happens there, even a small, well, I don't mean kind of small, you know, but let's call them small in comparison to market makers, right? A small trader can change the course of an asset on the 1 minute time frame. Probably not for too long, but it can. But if you have like a 3 or 4 candles range on a 15-minute time frame, that's almost an hour. If you get a block created there with its liquidity taken before before blasting off, that's probably a good enough range to hold price if it comes back to it. So this is going back to your question. This is the overall theory. You are in a downtrend. The trend starts showing signs of slowing down, in the sense of not doing lower lows in this case, and you create this whole range. This is actually a big range. How much time did it take? This was 23 hours. That was a lot. So you take out the liquidity of 23 hours worth of trading, valued at $1.223 billion, or volume. You take out its liquidity, and then you start showing signs of a sustainable move by blocks like this. You are probably going to take out at least the range is high. Just makes sense, right? And if by taking the high you create blocks like this example, you know, you are then in an uptrend. And then you should start looking into a higher time frame to see the same concept on the lower time frames. For example, take a look at this. This is a curve, right? None of these highs took out the liquidity of the previous highs. And even though, for example, this high took out the high of these 2 candles, it did not also took out these highs. So in theory, this high should be a little stronger. but not these guys. These guys are stacked highs in their targets. I think we took them. Yeah, we took them with this last one. And notice the reaction. So when people get liquidated, the liquidations themselves cause selling pressure, right? So after reacting to that, you get this nice reaction. And for example, even this was already a 0.63% move. Depending on your stop loss, in case you have more confluences there, depending on your stop loss, that's actually, or can be actually, a good trade. Unless you enter with 150x, right? And get liquidated pretty fast while going to the bar.
Yeah. Yeah, that's my problem. I'm needing sniper entries. I'm trying to perfect the entry game, and it's costing me learning. So I'm impatient.
Why don't you just do like smaller positions to practice? And
I do when I'm being good. I use smaller positions. I ladder in, and I'm really careful, and I'll be really profitable. But the small positions, and then I get excited when I'm reaching a level, and any red candle makes me short.
okay, notice two things here. These guys that I was talking about that were descending lows.
Yes.
An example of when this strategy does not work. The candle that took the liquidity of the range is not the candle that created the imbalance.
Elvis.
So because of that, and because we have a weaker low after that, it gets sticky. It just gets sticky. I don't know if this will hold.
Hey, Brian, how you doing? Hey, what's up, man?
But it should look like it could. This was very good. I don't know if you noticed, but I marked it out before going forward. That was another good entry.
No.
Ah man, that was fucking beautiful.
Well, there seems to be a conflict here. Why doesn't mom know what you're talking about?
That's really nice.
Did you do your homework?
It's not homework,
So
but it
imagine
is
trade from this guy.
You have schoolwork
right.
required to be handed in tomorrow
So-
from a teacher that gave you.
That target. It was the only safe target.
She only has 12
And a trade from
Yeah.
this guy
What do you have to do? What do you have to do?
for
It's working on it.
that guy.
3 props?
Let's see if it works.
Daring usually gets it done.
It does.
Your brain doesn't work.
8R. And I'm on the 1 hour time frame.
So you guys living on your loft? Yeah. No.
Drive all the way.
You guys got any bits?
Mute some.
Not at all.
Yeah, I didn't catch a lot of that on here, to be honest.
Yeah, right mouse click on his profile, and then you
did.
can mute him.
Let me just send him a DM.
You better lay down, love. Go and get your dinner.
Up to where did you catch that? Or what do you want me to redo? Because I don't know how much of that you heard.
It was just that last part where you were showing that trade.
I'm gonna go back to here.
Yeah.
Actually, this is kind of a spoiler now, right?
Nero, lay down. Lay
But
down.
I'll explain the. I was just saying that this is fractal. It works on all time frames. Obviously, the bigger the time frame, the worse is the risk to reward.
Yeah.
But what I was saying is this. On the 15-minute, I marked out these guys, and it's nice that on the 1 hour, it's also showing that. So this is your range. Okay, these 3-hour candles, and this candle, this white one, is the one that takes out the liquidity's range.
Yeah, that's what I need to remember. Yeah, that's the important element in it.
It's
sloping
important.
of the-
It's important that the candle that takes out the liquidity is the one that also creates the movement. This is really important. Why?
Yeah.
I'll mark this example out, and we'll then see it fail. Notice that the bearish candle does take out the liquidity of the range, but it does not create the movement. And this candle here has a higher low than this candle. This in turn creates a curve, and curves are targets. So you should not expect a possible trade from here. It should fail. Or, well, again, nothing in trading ever works 100% of the time, but especially considering that this is not a vector. If it was a vector, sometimes you get something like price just recovering the 50% line and continuing up. But essentially, because this is not a vector, and because it has a curve, or diagonal, or ascending lows, whatever you want to call it, this is a target. So, target. Okay. However, this guy, in theory, is a place for mitigation. Meta Kaplan, a guy that I learned a lot from, has a free YouTube channel and a free trading course. Also says that when you have a block like this ignored and an imbalance like this ignored, this is inducement, tricking people into thinking that price will not go back. Okay, so remember that those highs that we were talking about, they are liquidity targets. We take them out and have a strong reaction. After we have a strong reaction, we have that candle, and we have that candle. Notice that this candle here takes out the liquidity of the previous one. Let's see what happens. Okay, now two things interesting. This high, in theory, is strong. Let me change the caption. Supposedly strong high. Because it took out previous candles high. Or let's say liquidity. Okay, makes sense? After that, are you guys hearing me?
Yeah, I'm hearing, dude. I'm just turning my mic off, so I'm not.
Okay.
You're a little bit crackly, so I didn't want my mic interfering with you.
I'm crackly with does that mean?
You have slight noises in, like
Static.
Static, yeah.
Oh,
static.
wait.
Yes.
Give me a second. Is it better now?
Oh yes,
it's a
my
lot better.
friend.
Guys, you could
I
just say something. I've been talking for like 2 or 3 months that I need to get a new headset, but I'm poor, so I haven't gotten around to it. No, I'm just joking. I have been a little bit lazy. I know I need a new headset, but I really like the sound of this one. It's just a mic that sometimes does that static thing. But if it does that, just tell me.
It sounds good now.
Where was I? Oh, okay. I was gonna say that this guy, in theory, is good because so far it created an imbalance. Let's see what happens. Okay. First off, this guy that I told you that had a diagonal and its target, it follows the rules of the range except the liquidity one. The candle that got the liquidity did not create the movement, and so these are targets. They got taken out. We can clear this up now. And now, two things. You have the initiation of a move, and you have, if I go to a lower time frame, you have another, god damn it, you have another range here. Something like this. Actually, this is the better range. Yeah, when price came up to here, it couldn't go. It created a lot of equal lows there. The candle, again, notice this. The candle that took out the liquidity did start to move. Okay? So in theory, that's a strong range. After that, going back to the 1 hour, after that you have not only an imbalance to be recovered, because imbalances get recovered or tapped at least, you have an order block there, and in general, overall, this should be your general point of interest area to look for a trade. I don't know if I have a I don't have something like a POI, but let's say point of interest zone. Okay, so let's see if we go back there. We used the imbalance. Okay, and now we tapped into the order block. If we actually go lower time frame, maybe this was a better entry. I don't know if it did go there. Yeah, I don't think so. Okay. Anyway, in theory, because this white candle took out the range's liquidity and started the movement, because you never got bearish candles after that, right? So it started the movement. In theory, this range is strong. And in theory, if you get an entry from here, there are several possible highs to take. Your first one is this one, because again, notice this, a curve. Okay, none of those highs, let me get this to the side, this high did not take the high of the previous candle, and this high did not take the high of the previous candle. Only this guy took out this range's high. only this one. But because this is a curve, you tap into it or you go here. In theory, all of these are descending, so this could be your TP1, like so, and this could be your TP2, something like that. This was fucking beautiful because it was a vector. So you would now be here. Okay, so this guy right away got taken out. Notice this. This guy right away got taken out. It was liquidity, caused the reaction. You then react to this general area. And because you do not create a strong, a lower low, this low here is strong. And now you're just going for the high. Oh, by the way, notice that it did react to that zone again. So again, making higher lows. And boom. Did it take out that high? Yeah, it did. But yeah, so generally this is how you use market structure with blocks, with liquidity, and this is also why it's very hard to teach someone about market structure and not teach them about liquidity and vectors and points of interest in general.
Yeah, that's awesome. Thank you.
No problem.
Wow.
For example, this is just a reaction to stop losses here. It's probably not a sign of anything. It's just a reaction. Now I would guess that this and that, for example, if price goes back to this, it will take out the other one too, because after a range gets mitigated, it's a target. I don't know what happened that next. Oh, this is when we started the super stupid bull run, right? Probably. Yeah, okay. So this confirmed as a strong low. Oh yeah, these are the lows that Geo wants and never gets. Someday we will get them, someday. They are begging to be taken.
They got slaughtered on this.
They are begging. So yeah. Oh, I had to delete all that. What happened in the meantime? Absolutely fucking nothing. Yeah, this is actually really good. The fact that we are stalling price, it's just an example of what I've just showed you. So we have this high that I marked out here. It's liquidity. And we have that low. Notice that now we have this and that. Notice this. This high takes out this high, but not the previous one. So this is a curve. This on top. This is just a target. And this low here did not. It is not higher then this guy. So this is another curve. Both these will get taken out at some point. Both of them, probably. If you do a TR pocket Fibonacci, you'll probably see some very probable targets. Let me remove the extension. And I really like the fact that the 618 is here, because this is the block that I would like to take. This is also interesting. Liquidity here. And the 1272 here is also interesting because it's liquidity there. TR pocket deviations are amazing, and I get a lot of trades like this.
What time frame is that on, Andre?
15. 15 minutes. So a very degen trade would be this, with the protection of the single print, targeting that guy because it's the only safe target. It's a 2R trade, 2.3. It's not terrible, not something I would do, but but the single print there is a protection, because it's still fresh, it wasn't used.
Yeah.
So the first time a single print gets tapped, it usually causes a reaction. Not the second time. The second time it's just a target. Actually, let me see something. Oh, it did load, but it's not fucking showing anything. Wait. I forgot about this guy. It should... Yeah, okay, it just timed out for sure. Oh man, I think it crashed. It's crashing. I would like to buy exo charts just because of this. Adas gets...
Wait a second. Who didn't invite me to the party?
I did. Well, I mean, I didn't tag you, but...
I see
wrote
0
on here.
ads. 0.
Oh, it did.
It's okay. I just got off a... It's okay. I just did a one-on-one, so it's all good. I'm just joking.
How are you, bro?
I'm good, man. How are you?
I'm good.
Hello, everybody.
The day was kind of boring, so I'm just
Yo,
chilling a
please.
bit now.
Hello.
Wow, you
Hi,
guys
Paul.
you guys got titties in the chat too?
We got titties? I didn't see titties.
So I wasn't invited, and there's titties. That is like the biggest slap in my own fucking server.
Oh, Bubble Boy. I wasn't seeing the chat, guys. I'm very sorry.
Oh man, Jeff, can I get a couple quacks? Let's go, let's go. All right, man, carry on. Sorry to interrupt, Andre.
No problem, bro. Do you have any trades in mind for the moment?
Honestly, I gotta do TA. I just finished, one-on-one and whatever else. So I'm gonna do TA and I'm gonna update the group. But
Okay, cool. I'll be
right
waiting.
now, let me come to my charts. Let me come to my charts real quick. I'm not gonna share because I'm gonna be here for like 2 seconds. I'll tell you this.
We can
What I
switch. Do you
said a
want to
couple-
switch? Do you want to share?
No, I'm not gonna share because I'm gonna leave in like 2 seconds.
Okay.
But I will say this: there's no fucking way, guys, that we SFP'd the high on Monday,
Yeah, for sure.
and we didn't take last week's high, which is also the yearly high. There's no way that we're not coming back for that high.
Yep.
So 38.1 is gonna be the next short to look for.
Did you notice that we created descending highs? Looks just like a wyckoff.
Yeah.
So
Yeah.
perfect, man.
Yeah, we got nice liquidity above us, 100%. Do I think that the move above the high is going to be sustained? Absolutely not. I think that we're going to super SFP it wherever the high is. I don't know, I think we're gonna SFP it, and then we're gonna fall pretty hard. We're gonna come for all the liquidity below 34K. That's
I was
my
just
opinion.
talking about you, man, because we were seeing an example around 34K. And after we were on bar replay, and I was like, are we gonna take that low? And then price shoot it up, and I just remembered, oh yeah, Geo wanted
Yeah,
that.
I remember how man, if we took even a little bit of liquidity, I would have made so much money on this play up because I would have been so bullish.
Yeah,
but I made the mistake of prioritizing liquidity over market structure. Although it made sense, it made way more sense.
Still
to
does.
just tap some liquidity.
It still does.
Anyways, we're gonna come up, take the highs, then we're gonna fall down, and I honestly think that we could fall pretty hard. I'm not gonna lie. I think we could see 29K. I think we could see 28K. I think we could see
0.
I think we can see 25K before coming back up. Maybe 0, man. Maybe. You know what I actually think is likely now that I just saw it? I think 24K is likely. I think we come up, perhaps come down to 24K, get everybody back in the bear market blues, and then pump. Or we SFP the high, come down to 30K, then come back up to like 47K or 50K or 55K or whatever. Get everybody thinking that the bull market is here, and then rip it down to like 15K. That's what I think.
Agree.
We shall see, my friends. We shall see. Anyways, guys, I hope you guys all have a good night. For the ones that are in the US of A, happy Thanksgiving. For the ones that are outside of the USA,
Oh yeah, it's Thanksgiving, yeah.
happy Thanksgiving anyways, even though it's not Thanksgiving, but you guys should always be thankful for what you have. I will be around tomorrow because it is not Thanksgiving in Canada. So I will see you guys tomorrow. As of now, there's not really much else to update. I'm not looking at longs because we're long from lower. And I'm not looking at shorts because we're short from the motherfucking high, baby. So 38, 100.
Still have that 5-second trade open?
I do. I do, actually. You know what, man? The 5-second is kind of overpowered, I think.
Are you using it like Jason does? Following key level and then divergences?
I didn't, yes, but I didn't use it in the way that he does, in the sense that he creates like a 1 minute range or whatever, and like a local range. I knew that we were in one of my my yellow box ranges that I give you guys updates for. And so I knew that somewhere in that box, the rejection was going to come. So I was just watching market safe. I actually got stopped out once, before I caught the actual trade. I was also at the gym, so I was trying my best to like flip between apps. Anyways, nonetheless, no, honestly, but anyways, regardless, not important. I'm rambling now, but yeah, I believe that you know, we were just in the range, but 100%, man, the 5 minute or 5 second did me wonders today, and it would have been even better if I was not at the gym.
I'll try to take a look into that. It's just
Man,
interesting, man. It's just an interesting way of seeing it.
It's because I believe, and I don't mean this in a cocky way, but it's because I'm like so good with market cipher. And what do I tell you guys all the time? Watch it on the 1 minute because,
bro.
yeah, like watch it on the 1 minute because you see how it develops. Watch it on the one. Watch it on the one. That's how I keep saying. But now you can watch it on the 5 second because the 5 second moves the same as the one, which moves the same as the 1 hour, which moves the same as the daily. It's all the same. So because I know how to do that, I can enter really well on the 5 second, I think. Anyways, guys, Andre, I took enough of your time. Thank you very much. Sorry for interrupting.
Man. I'm just chilling.
Guys, I hope you guys all have a good night. I will see you guys later, and be nice to Andre.
See you, bro.
Por favor.
See you later, fella.
See you guys later.
I was going to say that I forgot what I was going to do, but I remembered, surprisingly. Which was to check if that single print there was used from the start. Weird. It's not even registered. Fucking ads, man. Fucking ads are so annoying. Okay.
I'm nervous on the surface, I look fine.
That's weird. It's weird, but it's better. So we only have 36,780. So fuck this. Fuck that. We only have that one. And the lowest one, 36,185. I should also mark out that TPO, 36,555. I can perfectly imagine a ton of people opening this trade, and it's a risky one. It's really risky. Not impossible. Technically not a bad trade, but it's risky. The TPO is right at the bottom of it. The liquidation level, though, might cause a good enough reaction already. And the trading view indicator is also showing another one. Okay. Yeah, I'm gonna guess that this is a bad trade, and maybe something like this is more probable, even though it's still risky. But I'm gonna leave it marked out. So this would be to take out that, or at least, actually, this would be to take out the high. This one as well. Why do I have that so big? Oh, I'm on the 15, right. I'm not expecting these to happen before 8 o'clock. This might happen at around 6. Let's see. I'm gonna do a paper trade for this, just for fun. This one should happen at around 9. This one should happen at around 9 p.m. or 11. And I'm sorry, but I can't show you why I think about those hours. But I can tell you that I'm working on the beta team for an application, and I can't say more than that.
Right.
But it gives out like I'm thinking about choosing my words carefully because I signed the confidentiality agreement.
Yeah.
But it gives out hints or probabilities about what and when might happen. Let's say it like that.
There is common reoccurring timescales, like in China. It's about 3 o'clock New York time. There's like a liquidity grab, and then round about 9 to
Maybe
2-ish.
Yeah.
Yeah, you have that. You
Well-
have your retrace.
Well, a good advice is, as a general strategy, like everyday strategy, and this is especially good for Saturdays. Mark out the high and the low of the Asia session, and on Saturdays mark out the high and the low of Saturday itself, the whole Saturday. This is kind of a crazy what the fuck? No, get out. I want to cancel.
You mark out the low of Saturday, did you say, Andre?
Yeah, I'm gonna give you an example. I have premium trading view now, so I think I can go way back. Yeah. This is kind of crazy, but it works. It's really kind of... At some point, it kind of freaked me out. So, 2nd of September starts here. Saturday starts here. And it ends here. So, which is the low? 25,740.6. So, okay, this is the lowest here, and that is the highest. So you mark out from here to here a TR pocket. One trade from the 272 with the stop at the 618, targeting as a TP1 the 0.5 level, and as a TP2 the opposite. So let's always mark out the opposite just for this example. So you would do this always. And as a stop loss, if you use, for example, in this case, you use 0.31 on the previous one, you can use the same for the other one, unless you have some kind of confluence. For example, I actually like this guy here, right? For the reasons that I taught you guys. So same here. This music kind of sucks. Looks like elevator music. 31. Okay. So you would always at least target the 0.5. This would be your TP1. So, one trade one with TP1 taken, right? Another trade, 1. And then you have this. Another win. I think this would lose, or would it? Would it not? Ah, so close. Okay. But 1 loss. And for example, this guy would be a massive win. Actually, these... No, yeah, just that guy. This guy would be... the quack sounds. This guy would be a massive win. Was there a vector? There wasn't, so in theory I would personally target that. And this is a 8R trade. Next Saturday. It starts there and ends there. So this is the high, this is the low. TR pocket from high to low, and I think you can already see it. Oh man, this was so close. 2635.3. I don't think it tapped. Jesus, I would be fucking angry at that. Actually, I think all of them lost. Right? This was a front run. Oh, but wait, we would get that win. Sorry. Actually, the front run would save us a trade, right? And we would get that. I don't think did this get to the 5? 60.4. Yes, it did. So 1 win there, and I think we would I think we would lose this one. So enter there. Yeah, it would close out before tapping the 0.5. But yeah, as you can see, I'm not going into more detail, but if you guys backtest this, it's kind of scary. It works a lot of times, and a lot of times I don't even have a reason for the
algorithmic in it.
I don't know, man. It's kind of crazy. It's really kind of weird. But yeah, I think this is it. These are the possible trades, with maybe another one here because of the liquidation level. But this one sucks. I mean, the risk to reward sucks. Actually, these 3 guys, these 3 are kind of dangerous if we create a strong downtrend, because of this curve. This curve is a target. So I would prefer, if we are to get one of these shorts, I would probably just TP one around here. 36,667.
Yeah.
And leave the rest going, because it's possible to get down to these guys. And these trades, I would only take them if we start doing those kind of sustained moves that I talked to you, like we have these blocks, and I would only take those with that kind of confirmation. let's see what happens tomorrow. I'm curious. And I'm going to bed now.
Yeah, thank you so much,
No
Andre.
problem. Man. Do you guys have any questions
Well-
before I go? Anything you want to ask?
My head's wiped. It's like Men in Black have hit me with them stunning things, them memory erasers.
Yeah, man. I think that when I started learning, for example, I have the Phoenix course, the White Phoenix course. If you start learning and not practicing, like imagine you see 2 or 3 or 4 videos and you don't go into the charts like on bar replay and trying to implement it. If you don't do it like video to video, forget it, man. You'll just get like a brain burn. You just get super confused. And especially when White Phoenix starts talking about Wyckoff, fuck me, man. That part was hard. It was kind of hard, yeah, because he sees Wyckoff and I understand what he means in terms of like Wyckoff schematics. You can't just follow them because they are not going to be 100% accurate all the time, and it begins to be a little bit subjective because some things are like, because the schematics don't have to follow every rule, you know, it gets a little bit abstract, and then as a consequence it gets hard to decide your trades based on it. So, you know, you want to like implement the concepts, but then it's not clear how you should implement it. It's also one of the reasons why I don't use it much. It's good as a general concept to understand where price might go, but going further than that is just hard. Man, now that I look at this way, these trades cannot happen. On the 4 hour, they don't make sense. Let me see the vectors. Yeah, this does not make sense. It doesn't make sense to open trades here. This should probably, yeah, this area here. This area like this, it should probably give a reaction for a possible retrace, but I don't think it makes sense to not go and take out these guys, especially considering the blocks. 667, 279, 538. So it's this guy, 349, and 538. This seems too probable to not happen. 35188, 351464. Yeah, it would be kind of weird to not take this guy, this curve. And I'm gonna delete this as well. I don't think I saw the 978, did I? 978, where are you? Why did I mark that? Man, this is so hard touch it perfectly. Yeah, I'm gonna delete that one. Fuck this guy. Yeah. If we have a reaction there, I'm gonna hold it until down
Okay.
here. Maybe then that 50 line is really juicy. Really interesting. Oof, but it's equal lows. Well, we also had equal lows over here. And we never tapped it. So fuck that. Yeah. That's it. That's my plan. Let's wait for tomorrow. Oh, never mind. I left them at specific times. What day is it today? Thursday, right?
It is now, yeah. Yeah.
So, where's Monday? Monday we went down. Bullish move. Okay. Then Sunday. Monday was still bullish. Yeah. Monday was still bullish, and Tuesday. So this is the classic one, I think. Oh. Okay, Monday was still bullish. Tuesday went down till Wednesday. What would be kind of fucked up if we made another high tomorrow?
Yeah, well, it's eclipse on weekend, I think.
What does that mean?
Normally, eclipses around this time, there's some kind of reaction. I think like FTX and stuff won't eclipse, and Binance FUD.
Man, you're reminding me of something that I used to make fun of until I started seeing that it kind of worked. Where do I have that? Yeah, I even created a folder called Interesting. But it's about this. So it's regarding the phases of the moon. And let's see.
If it's a solar cycle or a lunar cycle, that makes a difference as well.
Oh, I don't know about that. I don't know shit about astrology and shit like that, but let's see.
Yeah.
What day is it today? 23. So yeah, technically we're at the first quarter, and the first quarter says that we should create a local top. Full moon on the 27th, that's a Monday.
Right. So we might have bullish weekend, maybe.
Yeah, maybe. Well, there's one interesting thing about this is that these candles are not vectors. Oh, they are on the 1 hour. Never mind. That it would be really weird to not recover this.
Yeah.
Would be really weird. But we were talking about a possible retrace, And I'm wondering if I'm underestimating this area. I was saying that it maybe will only provide a retrace, and maybe, I don't know, we'll take a look at when it touches that area then. Because actually this area has vectors, but this one doesn't.
Yeah.
So theoretically we can just recover this area. Make that new high. And after that I have a very bearish week, because I think full moon starts on 27, right? And the full moon is for a bottom. That makes sense. Astrology wise, that makes sense. I don't know, man. I used to make fun of this shit because, well, it's fucking astrology, right? Who cares about what the fuck the moon does? But if you actually backtest this, you'll see that it actually kind of works, man. So
yeah, I think there's something. I think there's some things what supersede it.
Yeah,
and,
if there are proof that
what...
it works, I mean, who am I to say that it's bullshit, you know?
Yeah, it's just something to keep an eye on.
Yeah. I mean, I can't go against it if it works, right?
Yeah.
I guess.
The moon is flat.
Oh yeah. So I'm gonna place an alert at the entrance of this area. Once per bar. This is on the 1 hour, so once per bar is good enough. And we'll take a look. I'll try. My work has been kind of hectic lately, but I'll try, like, if the alerts go off, I'll try to give you guys updates. I'll try.
Yeah,
I can't promise, sorry, but I'll try.
Yeah, do what you need to do, fella. Make sure you
kind of anxious to get to December, end of December, because by then everything that is related to photography is going to end for me, and I'm just going to be focusing on the Discord and full-time trading, nothing more.
Yeah.
That should be
no
exciting
beginnings,
times.
fella. Yeah, no beginnings.
Indeed. Okay, guys.
Thank you, buddy.
See you tomorrow, man.
Have a good night.
Oh, by the way, I keep forgetting, guys. I never remember about the chat. I'm sorry if you guys wrote anything. Good morning, Dustlock. Sorry. There are indicators for what? For the moon?
Yeah.
Oh, I remember that I had one from Trade Travel Chill. Yeah, moon cycles. Let me activate those. But I think it only shows, yeah. It only shows them after they happen. So yeah, first quarter supposedly started there. The problem, I don't like this indicator just because it shows them. It doesn't show them before. In theory, before stuff happens, you also get.
Yeah, it's 5 days before, 5 days after you normally get a reaction. It's not normally. It's very rare it's dead on. But there's normally 5 days previous and 5 days after.
Yeah. If you use that with TA, it's probably a good indicator.
High time frames, I think it is.
This is from TradingView. Wow, just 2? No, thanks. Okay, this shows up ahead of time. Let me hide all my shit. Nothing more? Oh, it has... Are those vectors as well? No, they're not vectors. What the fuck's that? New and full
Crazy,
moons,
that.
many microphases in maturation. I don't even know that. Bonus show unrelated trend coloration. Huh. Here's a nice way to fuck a retail trader up.
Seriously, isn't it? It's
Oh, red candle. Short.
yeah. Bad.
Oh man.
Bad.
Some of these are good.
Yeah.
Let me remove that. So it doesn't actually. Oh, winter solstice. Okay. Man, fuck this. Type moon in the indicator. Menstruation.
Maturation.
That would be amazing. No.
Right, Alpha, my battery's going to go on my phone, fella, and it cuts off soon as I charge it up, so I've got to go.
Yeah, man, me too. I gotta go to bed.
Yeah, take care,
Have a
buddy.
good
Night.
Bye bye. See you later, guys.
Bye, bye.